The emerging market opportunity set has been evolving over the many years since the 1987 that the asset class was born. We believe that it's past in the cycle, it's past the point where it was mostly commodity related. Going forward, what we expect is that this asset class will be incrementally more technology and domestically driven companies. We also believe that considerations about social, environmental, and governance will become increasingly more important in order to assess the long-term returns for these companies. That's why we incorporated in our process a few years ago a scoring system based on governance, and we use the MSCI scoring system that also brings in some additional value to the discussion with the companies of their governance practices.
I think there are a number of opportunities in EM which are very exciting and which show the next evolution of the market. In particular, I'm very interested in certain parts of healthcare, the newer parts, so to speak, such as the biopharma space or the medical aesthetic space. Both of those I find very interesting and having a lot of new opportunities for us.
Looking at the evolution of EM over time is quite interesting, and that is something that our team, having the very long history with emerging markets, can offer some perspective. And when you look at emerging markets a decade ago and 2 decades ago, you look at a very completely different set of opportunities. If you look at materials and energy, they were the bulk of what emerging markets was. Place sectors like technology were very minimum. So that is one sort of lesson from that. If you were to create a portfolio 10 years ago with those names, well, your results would have been quite disappointing. The same situation, I mean, the largest emerging market just a couple of decades ago was Mexico. That has shrunk very substantially for many reasons in the market. China was when we started doing this back in the 90s, China was not even a player in this market, and now it's a very overwhelming, very important market. So I think to look at the past is a very dangerous thing. So I think it's important to use the experience to look at how these things change, but the one thing we learn from experience is that it's gonna be different. So when we look at the opportunities and the growth opportunities that emerging markets present, you have to look away from that historic sort of anchor of what emerging markets were. And places as healthcare, for example, a very great opportunity that is very lightly represented in the index today, where we see a range of opportunities. It's not only drug makers, it's drug distributors, it's hospitals, it's Chinese traditional medicine, all these things that are the future engine of emerging markets growth. That is an example. In terms of the consumer staples were the past of emerging markets. Nobody had a beer or like cigarettes, and they were gonna give everybody in emerging markets already had a beer and has access to one, and toothpaste and all these things. So that the staple story, I think, is very penetrated. But there is a whole new range of consumer opportunities in the consumer discretionaries. And those are stories that are more tailored to the urbanized middle class consumer. Restaurant dining, perhaps taking a vacation, travel, all these stories are very much in infancy with a very long runway of opportunity. And I think those are the areas of emerging markets that I think are underrepresented relative to the size and the greatness of the opportunity, really.